morning and welcome to another live technical analysis session. We'll be starting off with the euro against the US dollar. Now, simply looking at the chart, we can see that the euro is now moving in a relatively downwards fashion. The moving averages appear to be tilted towards the downside. You can see that it did temporarily break above our resistance level, noting that just here. So, this was, I would say, RR1. It broke up, but now has fallen down lower. Now, the Philly Fed Manufacturing Index is set to be released later on today and is expected by economists to potentially provide support for the US dollar. As such, we might be seeing a dollar strengthening in today's session. So, as you can see, this is the Euro USD chart. We're using the 4 hour time frame. Now, when labeling our support and resistance levels, we could opt for one of two scenarios. One being either a resistance could be placed at the most recent interval, which is what we're going to be doing now. So I would place my R1 at 1.0745. So we're using that, and then we just need to edit our chart. So 1.0745. It is in between the candles, so we will not be rounding it down to the nearest figure. So 1.0746. That would be ideal for our one Euro USD. And then we will be adding our text label. So changing this to 24, so that's easier for you to see. R1 and then 1.0746. Now, there we go. That is R1. Before we move on to our other resistance and our support levels, I would like to note the upwards moving trend line that was incepted on roughly the 14th of June. And then we need to adjust this. I'd like to be something a bit darker, removing the ray. And then let's just increase its width so that it's easier to see. So we had an upwards moving trend line, and then it was broken. So this, in theory, could have been a bullish triangle, but it broke below. Now, this for me is a bit of an issue. If it had broken above and moved higher, that would have been great. And if it had continued to validate our upwards moving triangle, assuming upwards moving trend line, it would have been very nice for a bullish outlook. But having broken below the upwards moving trend line, the RSI dipping below 50, so it came above, came back lower, and breaking below the mid range of the Bollinger Bands tend to imply a bearish market sentiment for the particular pair. Now, you may be wondering, where would we be placing our support levels? Well, our S1 level, had we not seen this bearish candle, would have been roughly around here. This was a previous higher low and would have been very nice for us to have placed our support level. But with the most recent price action, so the last 8 hours, this is for our candle, and then this one here, as you can see on your screens right now, which I'm using my mouse to point at, this would not be valid. So for our S1 level, we'd have to opt for something that is lower and has not been violated currently. Thus, our theory could either be this wick of this bullish candle, and then we have to look back to see actually a valid support level. And I would say, no, despite it touching on this high, the other price action does not tend to support this as a, I'd say, resilient support level. Instead, I would opt for something lower. I will be taking this bearish candle's closing figure and this bullish candle's opening figure. As you can see, it wicked down, tending to provide some support that this is indeed a support line. So this would be my S1. We will also be looking at the British pound. The BOE's interest rate decision has been released about 5 minutes ago. Now, please note there will not be a press conference from BOE Governor Bailey, and that is due to the fact that there is a UK general election on the 4th of July. As such, no press conference, and the market may be impacted predominantly from the bank's accompanying statement. We'll have a look at the British pound as soon as we're finished with the euro. But actually, considering that it was released 5 minutes ago and it might be more interesting for you at home to see, let's just go back. Let's just go to the British pound and we can finish off the euro later on. So, GBP USD 5 minute chart. It is now currently 12:06. 5 minutes ago, That tends to be a bullish signal for the British pound. Now it's relatively muted. If it was predominantly hawkish in nature, one would have, may have expected something more significant. So as you can see, the price action is not really supporting a bullish outlook hypothesis just yet. So what I'm seeing currently, without having seen the bank's accompanying statement, is that it wasn't as dovish as the markets may have expected. I do believe they have remained on hold. Currently, I don't have that data, but having not seen something significant, it means they didn't take the markets by surprise by either cutting or increasing interest rates. And I do see that the bank's accompanying statement might be slightly hawkish as the pound is gaining against the US dollar, at least on the 15-minute time frame. So on the 5 minute, you can see following the release, bullish. So scenario A, which I think most likely occurred, is the bank remained on hold and the accompanying statement was not as dovish as people may have expected, which tends to lean towards the slightly hawkish side. Now, once again, we're not seeing any significant movement on the particular pair. If I was looking at the 15-minute time frame, perhaps this would be nice for a bullish outlook. You can see not as dovish as they had expected. I would be placing perhaps my target for R1 at 1.270884. Higher than that, it would be at around uh, potentially being at the 1.27130 figure if we round that up. Now, this is my own personal opinion. And then R3 could be placed at 1.271270. Now, in terms of support, it would be at 1.2649, but it does look to be slightly bullish. It does need to break above the mid range of the Bollinger Bands for it to continue on its upwards momentum, as we can see. The RSI is increasing from 30 close to 50, further supporting our hypothesis that it may have not been as dovish as people may have expected, providing support for cable. So that's for the 15-minute time frame. But because we are looking at it from a more macro perspective, as you can see on the 4-hour time frame, those resistance levels don't really tend to show the bigger picture. So let's remove that. We will be keeping RS1 level at 1.26945. I would be placing instead my R1 at this prior peak, 1.2730, I would say. Let's zoom out, shift our chart to the right. So this would be my R1. My R2 would be around here. Let's just place that and make it a bit more visible. If I do place my R2 there, that would be too close to my R1. Therefore, we need to place it slightly higher. I will be taking this bearish candle and this bullish candle. The reason behind that is we have seen, as you can see here, a strong downwards momentum for the particular pair. Take the 4-hour candles and note how it rested on this potential support level. It opened, it wicked down lower, took out anyone that was potentially had their stop loss around here, moved higher, and then managed to break below. So this for me would be a valid R2 resistance line. For R3, looking at the distance we have between R1 and R2, placing it on this most recent high could be valid, but still would be slightly too close to R2 for comfort. Instead, I would opt for this recent high. Now, granted, this is very far apart from our R2 level. So, as I am self reflecting now, I think it would be better to place R3 close to R2. Even though it would not be optimal, still could be a valid resistance level. It's a bit too close, but still might be valid, and it remains to be seen. So we do have our R1. We could instead bring R2 slightly lower, looking at this older price action, and then validate it here. So this could be an intermediate resistance level, but from a more macro perspective, taking this price action validated here would be more optimal. And then our R3 level doesn't look that close to R2. Therefore, it has space to move. This is liquidity. The market may opt to seek this liquidity, and as such, might find R3. Then we have R2, validated recently, so this might be a better R2 resistance line. And now will be switching these in the color red so that it's easier for you at home to see. So this would be red. And looking at it's a bit might need it to be slightly thicker so that it's easier to see. I think that's much better. R1, R2, and then R3. Now, if you like, you could also measure the distance between the resistance lines. Despite our saying that this was too close to R3, and now bringing it lower is too close to R1. Unfortunately, with the price action, this is what I'm seeing. You could place it slightly higher, slightly lower, but for me, these are the resistance and support, the resistance levels. For support, as we said, now we can keep S1 at 1.26495, and let's just make this slightly bigger. And then for my S2, these two wicks, 1.26574, that would be my S2. Lower than that, you can see if you look at the left of your screen, we don't really have anything that's relatively close to S2. So let's say we didn't have any price action to the left, which we do. My support level would be down here, but that is very far away from my S2 line. Still valid, but from the next few days, in terms of that perspective, might not be, let's say, significant or supportive at least. So what we have to do, we need to look back in time, and we need to find older price action that might be close to our S2 line, and then we can opt for that support level. So this would be nice. As you can see, it is resting on these three particular candles and a fourth, validated recently by this wick of this bullish candle. So that shows to me that this was indeed a support line. It came back down and tested it. So even though this was in at the beginning of April, this support line was tested at the middle of May. So we have our support and resistance lines 1.26945. I'll add the text labels in. So since it's in red, let's finish off with our resistance lines. So we have R1 at 1.2730. You might be wondering, we will be adjusting this resistance line. Round figures. We go 1.2730. For R2, we will be using 1.2760. 1.2760. That is our R2 resistance line. Now, even though we might be slightly bullish for the particular pair, we should note that the initial jobless claims on a weekly basis is expected to provide support for the US dollar in addition to the Philly Fed Business Index. Now, those two could provide support for the US dollar. So even if the British pound takes aim for R1, it does not mean necessarily that it will move on R2, since the financial releases we're expecting during the American session might provide support for the US dollar. Our bullish outlook would be up until those releases. If they come in lower than expected, we might see the pound gaining on the US dollar, potentially breaking above R1 and then taking aim for R2. But personally, I would be looking at those financial releases very closely. But let's finish off with our text labels. For our three, we have 1.2810. And let's add that text label in as well. So finishing off with our resistance lines, 1.2810. So today we will be doing something a little bit different. We will be dropping down to the 15-minute time frame, looking at potential support and resistance levels on the 15-minute time frame, and then we will be readjusting and looking at a 4-hour time frame for a more macro perspective. So on a 15-minute time frame, we could see that it was moving in a relatively upwards moving fashion. If you look at the 4-hour time frame, once again we can add an upwards moving trend line validated by this wick, began at the middle of this month, validated here, testing S1, which coincidentally is also our upwards moving trend line. So bullish outlook from that perspective. You have a higher high, higher low, higher high, and this could be a new higher low. Therefore, from a more macro perspective, we could maintain a bullish outlook for the British pound as long as it stays above the upwards moving trend line and our S1 support line. If it manages to break below RS1 line, we would switch immediately for a bearish outlook, taking aim for S2. The concern I do have currently is that the RSI is still below 50, which does imply a slight bearish market sentiment. but from the rest of the technicals, it does provide some support for a bullish outlook, but still very close. And then we need to add our support lines. So our support text labels, just so that it's easier for you to follow at home. You could open your own charts and place them in and then just watch them as they progress, see if we're right or if they're indeed support levels and resistance. And then we can discuss them at a later time. We'll most likely be looking at these in the next few days as well. So for RS2, as we said before, we're taking that previous low at 1.2655. We're rounding that down. As we've said time and time again, we personally believe that hedge funds, banks, etc., don't look at smaller figures. So if they were entering hypothetically a position, I don't think they would enter at 1.265055. I think they would round it up, for example, to zero. Big figures, which is also a psychological impact. Now, that being said, in this particular case, I would actually like to bring it back up. Despite us just saying that they might not use those figures, if I round it up lower, it would ignore this swing low. So in this particular case, we'll be using 1.2657 as we had initially. But that ignores it, so it does have to go back up to 8. So 1.26580, that is our S2 support line. And we need to readjust our support text table as well. For S3, we would be keeping 1.2615, but once again, so that's still valid, so that's okay. S3, 1.26510, 1.2615. So that is my S3 support line. So we have our S1, our S1, S2, S3, and then our resistance levels. Now, I would also like to look at the Swiss franc. As you can see, the US dollar is gaining against the Swiss franc. So the S&B cut interest rates by 25 basis points. From a technical point of view and from a fundamental point of view, cutting interest rates could weaken your currency. As such, it is not a surprise to see the US dollar gaining against the Swiss franc. Now, it had broken a downwards moving trend line, so we now switch for a bullish outlook for the particular pair. So as we've said, we're dropping down to a 15-minute time frame. Let's bring that to the right. It needs to break this prior high for it to continue. The concern I do have is if you look at the RSI indicator, it's forming new lower highs and new lower lows. So that might tend to imply that the bullish outlook may be fading away slightly. That is a bit of a concern. It appears to be a discrepancy because if you look at the current price action, we're not really seeing that lower low, that lower high. We have seen the lower low, and I would expect this to potentially move in a slightly downwards fashion. If you're looking at the 15-minute, that was a 5-minute, still looks the same. Now it's above 70, so it might also imply that it is overbought and maybe due a market correction to lower ground. Now, if I was looking at the 15-minute time frame, potential S1 support line I'd have would be here, where it wick down lower, 0.8907. That would be my S1. S2, I would take this lower peak here. So you can see bearish candle, wick down lower. Two candles validating that, broken below, moved lower, broken above, moved higher, 0.88723. And then lower than that for my S3, take this peak here, validate it here, very nice, 0.88522. So S1, S2, S3. For resistance, that would be my R1, actually a bit higher, taking this wick here, 0.89111. That would be my R1. R2 would be placed at 0.89317, and then R3, even higher than that, would be placed at 0.89475. So that those would be my support and resistance levels if I was using a 15-minute time frame chart. But as we said, we are looking from a 4-hour perspective. So Uh, we do have to remove these now, and let's replace them. So for support and resistance, looking at this, it's accelerated rapidly. Bullish outlook for the pair, broken above our downward swing trend line. RSI validates and provides some support from more macro basis. My S1 would be here. You can see touched and then came back here. 0.8880. That is my S1 level. My S2 would be where the accumulation of buy orders occurred. 0.8835. That would be my S2. For resistance, I would take this lower high, 0.8928. So this would be my R1. My R2 would again be this high here, 0.8965. And then for my R3, I would take this high as well, 0.8993. But that is a bit too close. Instead, I would opt to bring my R3 slightly higher, just in case. It's better to have something higher than something a bit too close to your R2 level. And in this case, we're able to. When compared to the British pound, well, actually the euro, it's much easier for us to place just slightly higher. So these are my resistance levels. I will be turning them to red in just a moment, but I also need to find my S3 level. Now, as we've said, we have RS1 and then we have RS2 levels. And then we need our R3 resistance line. As you can see, this price action very nice for the accumulation of buy orders, found significant support and moved higher. So that for me is valid for our time frame. Let's turn these over to the color of red so that it's easier to distinguish between your support and resistance lines. And there we go. Text label. So let's place this. Let's use S1. So S1, as we've said, 0.8880. That is our S1 level. For S2, I would be placing 0.8835. And then for S3, 0.8770. So that would be my S3 support line. Now, this rapid movement in an upwards fashion is a bullish outlook for me, but I'm still a bit concerned that it might face market correction slightly to lower ground. So if it does come back to S1, that's still okay. If it does break below S1, that would be concerning for our bullish outlook. Nonetheless, continuing on us placing our resistance level 0.8930. That is still valid, so we can keep that. Big figure as well. Psychological impact for, I would say, traders. You know, big figures are nice for positions, so you might round it up, or someone might. It's nice for a resistance level. That's a lower high, that's a lower low. Valid resistance level in my view. And then for our R2, we place 0.8965. Rounded, that's very nice. And then that would be my R2 resistance line. We're running a bit short on time today. So we've done the pound, we've done the Swiss franc, and I guess we can either do the euro or the JPY. Or if you like, we could do gold or Nvidia. That's up to you. If there is something in particular you would like to see, now is the time to ask. Otherwise, we will be finishing off with the euro against the US dollar. For our 0.9010, we'll be rounding this resistance line slightly higher. So 0.9. Is it still valid? Yes, it is. So this is a valid resistance line. So these are my resistance and support lines. You could say they are a bit too close to each other, but when looking at these charts and what we're doing, at least for this live, we're not looking months in advance. We're looking for about a week and a half forward. So these might be valid for the next few days, and then we can readjust, and then we can look at them again. If I was looking for a more macro perspective, I would use a daily chart, but I'm using a 4 hour. So we're looking about a week and a bit in advance for the R3 level. R1 is slightly a bit more closer, so the next few days possibly. Same with S1, same with S2. So keeping that in mind, we will be going back to the euro, which will most likely be our final chart of the day. So as we said for the euro, it has broken below our upper swing trend line, which is cause for concern. Now, yesterday we were bullish for the euro against the US dollar. Looked as if it was a bullish triangle which had broken above. Was nice for potentially bullish outlook, but the RSI has now dipped below 50, broken below our upper swing trend line, so that does not appear to be valid anymore. Instead, we now switch for a bearish outlook. Our S1 level is 1.0690. My R1 level is 1.07460. We will be moving with our support lines. So this would be my S1. Looking for S2, we're looking at lower lows, perhaps at a point upon which it formed a new higher low. So at this point here, you can see higher lows being formed, failed to break below and then moved higher. That's nice. Finding support. Price action looks good. These two candles validate our hypothesis for this being a potential support level. So this for me would be minus 2. For S3, placing it at this wick would be too close to minus 2. So we need to go even further back. Same scenario, but we're not looking for lower lows and lower highs. Look at the price action here. We have about 5 to 8 candles that found support at this point, turned to resistance, broke above, moved higher, came back lower, turned to resistance again and again. Now may act as a support level. So this for me is a valid support level at 1.05745, 0.575 if we round that up. So these are my support levels. For resistance, as we said, 1.07460. Now for R2, this is a bit tricky. We did have a gap down. So in theory, we had our resistance level at this gap. And we could still use that in practice. I don't think that's too valid. The price action doesn't really support that anymore. So what we would opt for is taking these candles here. Came lower, found resistance, tried to wick above, but failed to close above, now acting as a resistance level. Higher than that, we would take either a recent high, a bit too close, using the price action here, act as a support level, managed to break below, moved lower. It's still above this old high, so we might see some resistance, but I think this is more of a significant resistance level. So let's place those in, and once we finish with the text labels, I think that will be it for today. So, as we said, R2 1.0810, that is my R2 resistance line, but then it just goes in between, so 1.08, see this better. I think I might have to keep it as it was, 1.08111, or 130. Let's see, 1.0815. 1.0815 is a bit better. Takes the wicks into account as well as this bullish candle. So somewhere around there, it might not be precise exactly, but around here, I would expect to see some resistance as well. Coincides with the wick of this bullish candle as well, further supporting our case for this being a potential resistance level. 1.0815, that is R2. R3 would be 1.0860. That is very nice. And then we will be placing our support levels. Now, just because it's broken below our downwards from trend line does not mean we would maintain a relatively bearish outlook. I would like to see the pair bounce off S1 and stay within S1 and R1 for a sideways moving bias. I'm not bearish just yet. for me to switch to a bearish outlook, it would have to break below my S1 level. If it does that, then yes, I would switch for a bearish outlook. So this would be S1 1.0690. And we need to turn this to the color of green. There you go. For S2, as we said, 1.06340. 0634, not 640, and then 1.0575 for our S3 support line. So S3 1.05750, 5.57, same thing. And there we have it. So these are my support and resistance lines for the euro. If you like, you can take a quick screenshot, place them on your own charts, see if we're correct, see if it was slightly higher or lower. Would be nice to just monitor the price action. So this is for the euro USD. USD against the Swiss franc. Bullish outlook for this particular pair. Sideways bias for the euro. And for the British pound, maintaining, I'd say, a sideways bias between S1 and R1. And I think that's okay. And if we drop to the 15-minute time frame, perhaps the company statement was slightly neutral. I haven't seen it, I haven't read it, but it wasn't dovish. If it was, it would have broken below S1 already. This price action tends to make me believe that it was relatively neutral or either not as dovish as one may have expected. So I think that does it for today. Thank you very much for watching, and we'll see you all next time.
Just go ahead and get started now. So, first things first, as per usual, a disclaimer. So, products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the um, price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and yeah, clear market movements basically. So in this GIF, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay? Okay. So support and resistance. You can use these levels as take profit and stop loss levels, but you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows, although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, yeah. You want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have four swing highs that are about the same level, and we want to avoid cutting too many candlesticks, but if you're just cutting the wicks like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay, okay. Another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have three swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay, next let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think, yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But if, maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay? It's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance because we are expecting price to retrace back to the level and pull back to it. Okay, it is a little bit confusing, so let me know um if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my resistance, pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay, okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so those are is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have three swing highs that line up nicely. Okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a Fibonacci, not Fibonacci, it's considered a pullback support. Okay, um, basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have three swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance overlap resistance level, which is what I'm going to get into in a little bit. Okay, okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your um, moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Okay, so you can see here the minute that price, okay, here in the original image, price broke out of the swing low support. So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level, okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now, price has made a pullback to our pullback support, and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, another example. So we have two swing highs that are lining up. You can see these purple circles here, and we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number three, point three, price has pulled back to our support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay. So once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point two, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance, and then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then point five, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Um, okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay. So this is an example of a really clear um, price movement. Okay, so we have 3 swing highs here, and you can see really clearly the peaks here. Okay, okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price um reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis, and then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes um a valid trend line. Okay, so what makes a valid trend line is if there are at least three touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have three touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4 hour time frame. So we typically like to analyze either on the 4 or 1 hour time frames, and how we decide between the two is like I mentioned earlier by looking at the chart structure. Okay, the price structure. So you can see on our 1 hour time frame, it isn't really nice to analyze on. And the reason for that is because price movement is like pretty small. Okay. It's quite small. But if we look at our 4 hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4 hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second support, second resistance, my first. Okay, I'm gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another um swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay, and my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so that's I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more, or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay, second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay, now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these three levels, and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash, okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Um, mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. The 50% is no longer valid because price has already broken out of it. Mm, yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier, 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in um with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance, you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, um, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been um it's not been surpassed yet. So we're still seeing price test this level, But because of the downtrend from this descending trend line, we saw on the daily, the weekly time frames that price is still pretty bearish on those levels, on those time frames as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now, it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line. So it's also supporting our bearish signal here. Okay, let me know if there are any questions. Oops. Okay, if there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do um, maybe the Aussie dollar because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, um, let's see. Yep, we have a descending trend line on our weekly time frame. Okay, next, if we take a look at our daily time frame, also descending trend line here. Okay, remember the three touches here. Okay, next on our 4 hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Um, maybe I'll just go ahead and analyze this on a 4 hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. And my second support here. Okay, now we'll go in with some Fibonacci levels again. Hmm. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78. Okay, it lines up, but it's no longer valid because price has already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Um, okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I am doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Um, yeah. So for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have um, confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay, any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. Um, for Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and putting for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Um, okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels. that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question. Okay, any other questions? Okay, if there are no other questions, yep, no worries. Thank you guys so much for joining me today. I hope you guys found this helpful. And for part two, I'll see you guys next week. Thanks, everyone. Have a great rest of your week. Bye.